Hey guys, Doug the Retirement Guy here. We have a new review of the ULTY option income strategy from YieldMax. Now, this thing, here's the big thing. So much has changed in the past week and over the past month that I just want to update everybody to keep everyone focused on what is actually happening with ULTY. A lot of exciting things going on. Before we get into that, I got to put a big welcome and thank you out to all of the supporters on Patreon. You guys are phenomenal, and without you, we couldn't keep the channel rolling. If you want to support the channel, go down in the description, hit that Patreon button. You can join with a free account, or you can make a small little donation to the channel. Second thing is I want to thank all of you the subscribers. You guys are phenomenal. You keep adding hundreds and hundreds every week, and we just love you to death. So let's get into today's changes to ULTY. Notice to all viewers, past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are illustrative and may not be suitable for all individual situations. Always consult a licensed financial advisor or a professional before making any financial decisions. So let's take a look at ULTY. If you've not been open to this or haven't seen this before, this is YieldMax Ultra Option Income Strategy ETF. It is an actively managed ETF and it seeks to generate weekly income from a portfolio of covered call strategies on U.S. listed securities, what they call underlying securities and collective underlying securities. I know it's confusing. Basically, what they're doing is going out trying to find U.S. listed securities that they can get involved into, either owning the funds, doing a synthetic covered call, doing different areas to it. Their whole thing is built around trying to find securities that they can sell covered calls on to generate that income. So this fund definitely is so focused that's why you see the 84.23% distribution side of it. The one stickler I do have in this, and I will say it right now, is the expense fee. The expense fee used to be 0.99%. It kept it under a 1 percentage point rate. Now they've taken it and bumped it to 1.3 because there is so much more, I'll say, work that has to be done. And so these are the negatives to it, and that there's so much money being made for it. The company wants to definitely make some more money from it. But I'm going to tell you, this is a thorn in the paw, but it's not the stick that breaks the camel's back, because everything I show you will have the expense fees already deducted, included in all this. So you don't have to worry about the numbers I have here. But it's one of these things just to know about the expense fee. So let's take a look at the first change that we've talked about that we're so excited about. Well, first off, you all know, if you don't, this is a weekly paying dividend. So that means every Friday it pays a dividend out, and for the fun of what it's done in this past week. Here's the exciting part, and you probably can hear it in my voice, the exciting part of this. This is the last history of dividends from May 22nd all the way up to July 17th for this video. They have now paid the highest cash amount out at 0.10 cents, basically 0.1035 dividend payout. This is the highest it's been since May. Now, it was a little bit higher after that, but this is the highest in 9 weeks. Now, why is that exciting? Look at the fund. Look at the numbers. They have been slowly climbing. In June 20th, they were at its lowest peak, and now it's been climbing since June. So that's 5 straight weeks of increases in dividends. This thing is starting to pay and develop bigger and bigger dividends across the board. That's not the only real exciting piece to this, but it's one of the huge parts that it's starting to pay bigger and bigger dividends as we go along. We hope this will continue on, and it's already shown a 5-week track history that it will do that, and a 9-week of being the largest. But the next big thing that I think a lot of people miss on these dividend payouts, and that is that they're done as return on capital. Now, I will be upfront and honest with you. that when I first saw this, I quite frankly panicked. And I know a lot of our viewers sent in comments and so on to try to straighten things out. So I went ahead and did even more research to help everybody out of what is this dividends, our return on capital? Why are we excited about this? And I'll explain here. Return on capital is actually a new tax saving system used by many ETFs. We're starting to see this more and more on a regular basis. The distributions can be classified in many different ways, which says how they are taxed. So here's an example that we built for you of an ROC, the return on capital. If it paid 30% income and 70% distribution, return on capital, that's the proper word to use. Instead of always dividends, it's distribution. The ETF that will just say you bought at $50 a share and you bought 100 shares of that, you have $5,000 invested. If that ETF fund pays $8 a share, and at 100 shares, you would get $800 in distributions. Now, at a 70-30, 70% distribution, 30% income, your 30% of the 800 would be $240. And guess who's knocking on your door at the $240 point? And that is Uncle Sam. He says you need to pay income tax on $240. Okay, I hope everyone's clear on this. So the 30% is taxable at your regular income tax. What happens to the other? So now the question is, what happens to the 70%? That income, 70% of it, of $800 is $560, and that is return on capital, ROC. So your investment has gone from $5,000 down to $4,440. Now, don't freak out. Don't panic yet. Since this is money coming back to you, you owe no taxes on it. But you still have 100 shares at $50 or $5,000 in value. Okay? So you still have the value of the fund. It's your cost has gone down because of the way they've sent their distributions back to you. Now, if you stay in long enough, your investments basically will go to zero. And at that point, the distributions would be marked as capital gains. And you'd pay capital gains tax. Okay, that's a long-term strategy. This whole thing is set up for a very long-term strategy because as every week it pays out, you're slowly reducing your investment. Now, if you buy more shares, your investment is going to climb again, which means you can get even more income ROC return and continue on. So we've done some math on that, and easily that this fund could easily roll into basically a year and a half to 2 years. If nothing touched, you didn't do anything with it, you're probably in a year and a half before you'd ever have to worry about anything about capital gains, stating that you take all of the ROC, you take all the dividends, take that out, and don't buy another share and don't do anything, because every time you buy a share, you're going to add another year onto that share. And we'll cover that a little bit later. But this is what return on capital is, and this fund pays 100% return on capital each and every week. We'll notify you if something does change on that, but right now, this is the strategy they're using. So what else has changed? What's made this fund so exciting? I think people are starting to finally catch on to what ULT is about, where it's going, and so on. Because assets under management, when this fund started in February of 2024, it had $664 million. That is what it started up with. Something exciting happened on June 9th, and I'm surprised we didn't get a big blow up on YouTube, and I don't think we ever did anything. Definitely I didn't do anything, but they broke the $1 billion mark. They had over $1.03 billion under asset. That was phenomenal, and this was great. But I can tell you what my next exciting piece is. This is only basically 9 days later They now have $1.61 billion under asset. So for anyone telling you that it's your return on capital, it's your money coming back to you, look at what's happening. People are putting more shares into this. They're gaining more and more assets under management from this program. Now, part of it is is what's happening in the stock side, the outstanding shares of stock. January of 2025, they had 150 million shares outstanding. In July, only 7 months later, they're at 251 million shares. You're just shy of doubling the number of shares that are out there. And look what's happening. The billions of dollars that they have under management, giving them more access to do things with. So I think what you guys really have to understand is this fund is not the bad devil that we thought because of everyone says NAV erosion, NAV erosion, NAV erosion. What this fund's really doing, it's found its bottom and it's starting to come back. And we're telling you this ahead of time because we think it's time to jump on the train if you're not onto it and take a serious look at this. So let's take a look right now what's happened in the last, I'll say 30 days. Okay, we think this thing has found some legs. When we look at this in June 20th, this thing was about a $6.20 stock. And it would jump up to the 630 mark, and then it would fall right back down to the mid 620s, something 624, 623, 621. July got back down to 620. So we kept telling you that this thing is not going to get above 620. This is the rock bottom point. I think we had a 610 landing point that would never go below 610. Well, this thing is just sitting here every day. It jump up, come back down, jump up, come back down. But look what's happened in the past 7 basic days. This thing has climbed to the 630 mark and continued to climb up to the 640 mark and now has flattened itself out at 640. In the past 5 days, the fund is up 3.22%. In 1 month, it's up 3.72. Now, again, I will give you year to date, we're still down 28.54%. But if you're not invested into it today, you don't even need to worry about the year to date because you're investing at a $6.41 mark and you're seeing 3% gains in a 5-day or 1 month period. The other thing is this fund is, like I said, found its bottom. When we look at the 1-year program, this is where you see that big 28% drop off. Way back, look at it, it was $15 at the beginning of this year. Okay, and it slowly, steadily drop. And this is where the negatives came in. Everyone jumped in and said, NAV. And then we went to weekly paying, and look what it established itself out. It balanced its position. It changed what it was doing. We went through, unfortunately, the April 2nd tariffs, and it dropped to the lowest point there. Okay, now I am showing you this one from last week, and there's a reason for me showing you this. Look at the flat line that we've been going to. Okay, the flat line all the way up to July 3rd. Now we're going to take and go dial into that one little dot, go a little bit deeper for you, and look what's happened inside that one. After that one dot, we're looking at this and saying, look at the line, look at the jump, look at the moves it's making back to that 641 mark. So what we're coming into you with is this thing is holding the 620. It is now showing that it's starting to hold the 630 at the 640 mark. So this thing has, and it's so hard to see on the first screen, which is why we say that, is it's starting to make its jump up. Because if I showed you now, you just see a little blip, not even hardly a movement on the top line. But when we dial into this, you see a lot more. When we go to, again, we're using the old screen. I wanted to show you this to give you the comparisons. Look where we're at before. We were below 620 at the start of the week, or the start of the month, dropped down to that 610 point, which was our low. We called that 610 was our landing point, that it won't go below that number. It is now come here on end of June $6.20. And at the start of July, this holiday weekend, it was $6.28 for at the July 3rd. Since then, look what's happened. 3% gain from 628. Okay. You've gained 3% over 5 days. And look at the daily averages. The 30-day average is now higher than this 90-day average. That means this thing has taken a curve over the past month. It's taken a curve and it's starting to climb. So you're going to watch the 90-day is going to change. And basically, it's going to sound stupid, but in 60 days, you'll see the 90-day change to where it's going to be above the 30-day mark because the mark is going up. The new trailing low is $6.20. We don't see the stock dropping anywhere below 620 again. We believe it's going to hold that mark across the board unless, again, something major takes a major hit. But so far we haven't seen it. We've seen new tariffs kick in. It's not affecting the stocks. People are now sit back and saying, oh, just wait on these tariffs. We don't know. Will they go into effect? Will they not go into effect? Will we have adjustments? So the market is not as scared anymore of the tariff side of it. So we're seeing the stocks performing the way they should be. And as we move through this, we show you the over the time package that we have done. This is where a year ago, if we would have invested $10,000 in ULTY, we would have bought at $13.82, been able to buy 723 shares. Now we know that stock has dropped. We know it's gone crazy over the past 12 months. So we would be down 53% or $5,361. Saving grace of this is in 12 months, we would have collected $6,092 or 60.92%, which means we would still be ahead 7% or $730. But this is using numbers at $13 of when we originally bought it. We're now looking at this saying, whoa, we are at a rock bottom time. We're at the bottom of the barrel and we're moving up. I show you what we actually have done is in April, when we had our computer spit out our number and said, hey, it was a buy to us. We bought at 576. We bought 1,736 shares. Now, over the past basically 4 months, it's about, as you can see here, it's about 15 days over 4 months. The price is up to $6.41. We are actually up 11.28%. Okay, that's in stock change. That's because we're buying at the right time. The next one is our dividends. In the past 4 months, we've collected $2,638 or 26.38% already in dividends. So our total gain already is $3,767 or 37.67% gain already. So your question probably is asking you, is this the time to buy? Have we missed the ship? Have we missed the bus? Well, here's what we feel right now at this channel is it time to buy? And we believe yes. Even at the $6.41 mark, we believe adding to your portfolio is actually a strong piece to do. And I'll tell you why. We go back to a couple of our indicators. One, the 30-day average is now higher than the 90, which means the stock is climbing. Now, 10 cents is not a huge difference. Even in a $6 stock, we won't say it's 10 cents is a huge difference between those averages. But from what we've been watching through this whole thing, our trailing low of 620, the 30-day average of 624, higher than the 90-day means the thing is clocking to a higher number. Normally, I would tell you I'd like to buy this at 624 to 627, 628. Now, that's fine-tuning it because I believe the 30 average means something. But with this fund and this stock and the way I'm showing it starting to climb and starting to go, I think we have a different move to do with this one. And I'm going to show you right now, and that is the return on investment. If I bought a share right now today for $6.41, and if the dividend stays at that, actually below the number it went last week, but 0.095 cents, which is the average that I use, I believe that that's basically what it's been paying right along all year long, 0.095 cents. It would only take 67 and a half weeks to return on my investment. So now you can see why I said before the ROC is basically about a year and a few months. So you take away it's 1 year and 17 weeks, and then we'd have all our money back. That's why I think this is not as big of a gamble, and it's not as big of a deal buying 10 cents, 15 cents cheaper, as much as we all would love to do that. 100% behind you. I'd love to have that lower price, but I don't think this one with the dividend to the return on investment of that $6.41 is too far off. I truly believe that. So the math works out. If I can get all my money back in a year and a half, basically I'll call it a year and a half, year and 17 weeks, I'm good to game. I'm good to put some money into it and collect some money and let it roll and watch the stock and let it roll. So my question is this good for a retirement account? I'm going to say yes to it. The dividend in 4 months of 26% definitely is awesome. Looking at about an 85% over 12 months if you bought it now. 11.23% gain in 4 months. Again, if you're buying now. So my whole thing is if you're buying this right, this is a fund that, yes, you can have in your retirement. I will always tell you, and with any fund you put in there, you do have to keep an eye on it. You do have to stay focused on it. Maybe not daily, but realistically, monthly. Watch the channel. We'll always update you on ULTY because this is a fund that we personally have invested in and we have a good interest in. So we put this as a moderate buy. I hope you guys like the information that we've given you. And if you do, hit that like button. If you're not a member, hit the subscribe. You'll always want to see what's happening with ULT, plus all the other hundreds of other different stocks that and ETF funds that we watch. And best part, if you have any comments, feelings about it, leave them down below. We love to hear what our fans are talking about. Guys, this is Doug, the retirement guy. And remember, anything that you do, always talk to a financial advisor to make sure that you are doing the right move. And we'll talk to you later.